15 money-making assets that will set you free financially. Hello friends, with another great performance. Welcome to Brain Grain Videos. Diversifying your revenue streams is important when considering the best ways to build a financial buffer and avoid being dependent on a single source of income. This means having several streams of income coming from different investments or assets that make money. Avoiding relying on a single source of income or stream of payments will help you in the long run by maximizing the benefits of diversification. In fact, a lot of prosperous people decide to achieve this by utilizing income-generating assets or assets that produce cash flow. Let's first talk about what these assets are, and then we'll evaluate some of the best options for smart income investments. Whether you're attempting to run a side business or just want to acquire a little extra money each month, passive income can be a terrific strategy to help you generate extra cash flow, especially as inflation rampages through the market. When times are good, passive income can help you make more money. It can also help you get by if you suddenly lose your job, decide to take some time off work, or if inflation keeps eating your purchasing power. Here are 15 money-making assets for getting money. Number 1. Crypto staking. Staking cryptocurrencies allows you to increase your holdings in certain digital assets by using them to confirm transactions on an underlying blockchain network. You may receive additional cryptocurrency as compensation for staking a cryptocurrency. Staking, for most people, involves delegating your cryptocurrency to someone who is compiling records of transactions on the network on which it runs. In order to protect against fraudulent transmissions, those verifiers must stake some tokens. By giving the voting power of your tokens to a reputable verifier, you can get a share of the rewards they receive for carrying out their job accurately. Risk. If the verifier with whom you are working is penalized, you may be as well. Additionally, when you stake, you may be required to commit your holdings for a predetermined amount of time, which prevents you from selling or trading them. Staking programs are available on a number of cryptocurrency platforms, but they have recently come under regulatory investigation in the US, Europe, and India. It is important to remember that staking is not available on many countries or cryptocurrency platforms, most notably Bitcoin. Number 2. Peer-to-peer, P2P loans. Peer-to-peer or P2P loans are private loans arranged between you and a borrower via a third-party middleman like Cred, Prosper, or Zest that focuses on better credit risks and funding circle, which targets businesses and has bigger loan limits. As a lender, you can make money by collecting interest on the loans. However, because the loan is unsecured, a default might leave you with nothing. You must take 2 steps in order to reduce that risk. Increase the variety of your lending portfolio by spreading out smaller sums across several loans. To make wise decisions, examine historical information about the potential borrowers of your country. Risk. P2P lending isn't entirely passive, and you'll need to thoroughly vetting your potential borrowers because it takes time to master the metrics. You need to be very careful to monitor payments because you are investing in numerous loans. If you wish to increase your income, you should reinvest whatever interest you receive. High-yielding personal loans might also be more susceptible to default during economic downturns. Hence, when things get bad, these loans may default at larger rates than usual. Number 3. Dividend stocks. Companies with dividend-paying stocks make payments on a recurring basis to their shareholders. All you need to do to receive cash dividends from a company which owns the stock. Companies pay them out quarterly from their profits. The more shares you own, the bigger your payout will be because dividends are paid per share of stock. Owning dividend-paying stocks can be one of the most passive ways to make money because the income from the stocks is unrelated to any actions besides the initial financial investment. The funds will be put directly into your brokerage account. Risk: choosing the correct investments is difficult. Companies that pay out a large dividend, for example, may not be able to sustain it. Financial expert Graves warns against beginner investors who rush into the market without fully researching the company that is issuing the shares. According to Graves, you must look at each company's website and feel confident with their financial statements. You should investigate each company for 2 to 3 weeks. However, there are ways to invest in dividend-paying stocks without investing a lot of time in each company research. ETFs or exchange-traded funds are what Graves suggests using. In simple terms, ETFs are investment funds that hold bonds, commodities, and stocks but trade similarly to stocks. ETFs also help you diversify your assets. So if a single company reduces its dividend, it won't have a significant impact on the ETF's price or income. ETFs are a great option for beginners since they are simple to grasp, extremely liquid, affordable, and have significantly higher potential returns due to significantly lower fees than mutual funds, according to Graves. One risk is that stocks or ETFs could decline considerably over brief periods of time, particularly in unpredictable times like the financial markets shocker in 2020 caused by the coronavirus epidemic. Some businesses may completely decrease their payouts in response to economic duress, while diversified funds may not experience as much of a hit. Number 4, create an app. Creating an app could be a way to make that initial time investment and then reap the long-term benefits. Your app might be a game or a tool that makes it easier for mobile users to carry out a challenging task. Once the app is available to the public, consumers can download it and you can make money. If you can create an app that appeals to your audience, it has a lot of potential. You must think about the best way to make your app profitable. For example, you might display in-app advertisements or charge a small fee to customers to download the app. Number 5, a bond ladder. A bond ladder is a series of bonds that mature at various intervals over the course of several years. You can reduce reinvestment risk or the risk of reinvesting your money when bonds offer too low interest payments thanks to the staggered maturities. Bond ladders are a traditional passive investment that have long been popular among retirees and those who are approaching retirement. When the bond matures, you extend the ladder, transferring the principal into a new series of bonds. You may then sit back and collect your interest payments. For example, you could begin with 1-year, 3-year, 5-year, and 7-year bonds. When the first bond grows in a year, you continue to have bonds with durations of 2 years, 4 years, and 6 years. A bond ladder eliminates one of the major risks of buying bonds. The risk that when your bond matures, you have to buy a new bond when interest rates might not be favorable. Sometimes bonds also carry additional risks because corporate bonds are not guaranteed by the government like treasury bonds are. So if the company defaults, you could lose your principal. Furthermore, you should get a variety of bonds to spread your risk and reduce the possibility that a single bond may negatively impact your portfolio overall. The value of your bonds can decline if global interest rates increase. Number 6, advertise on your car. By merely driving your car around town, you might be able to make some additional cash. Get in touch with a specialized advertising firm and they will assess your driving patterns, including where you go and how far you travel. The agency will wrap your automobile with the advertisements at no expense to you if you are a good fit for one of their advertisers. Agencies prefer modern vehicles and drivers must have a clean driving record. Although driving is required, if you're already putting in the mileage, this is a terrific way to earn hundreds of dollars per month with little to no additional expense. You can pay drivers according to per mile. If this idea looks interesting, be extra careful to find a legitimate operation to partner with. Many fraudsters set up scams to snatch cash. Number 7. Build a traditional business. Aside from the online business, owning a traditional business is also equally effective when it comes to generating income. If you have enough capital to run a traditional business, you can start exploring different opportunities and start something of your own. There is a wide range of options to choose from, like cafe, restaurants, business franchisee, electronics store, car wash, clothing store, ice cream parlor, saloon, and many more. In addition to running an online business, running a traditional business is also a successful way to make money. If you have the funds to operate a conventional company, you can start looking into customers and creating your own venture. While some of these businesses need substantial time and financial investment, others only need little maintenance. You can pick the best business based on your financial capabilities, whether you want to work on it full-time or just as a side job, the level of competition, and many other similar criteria. For some people, starting a business does not guarantee success. Moreover, it is often considered risky as well. So, while owning your business is a great asset to have, but don't forget making it successful is your responsibility. Number 8. REIT or REIT. If owning a property for renting is not feasible for you, then investing in REIT would be a more practical idea. REIT or Real Estate Investment Trust is an entity that channels funds into operating, owning, and financing income-producing real estate. It operates similarly to how mutual funds work. While mutual funds invest your money across multiple businesses, REIT companies manage portfolios of high-value real estate properties and mortgages. For example, a REIT company will lease out properties and collect rent from them. Later, they distribute that rent as income and dividends to its shareholders. Investing in REIT provides regular income, portfolio diversification, and long-term capital appreciation. Examples of some of the REIT companies in India to look out for: Embassy Office Parks REIT, Mindspace Business Parks REIT, Brookfield India Real Estate Trust Limited. Number 9. Certificate of Deposit CD or FD. CD is safe income-producing assets offered by banks and credit unions that provide interest premiums on your savings in exchange for you agreeing to keep your deposit for a predetermined fixed period of time. You can think of it as giving a personal loan to a bank, and in exchange, they pay you some interest. You can compare various bank FD rates to figure out your best bet. However, in most cases, the interest you get is not significant. So, you won't be able to grow your money by too much. But if you are someone who wants to keep some of your investment safe, like the money in your emergency fund, this could be a good asset. Number 10. Set up an annuity. An annuity can be a good place to set up reliable income. When you purchase a standard annuity, you pay a financial institution, usually an insurance company, money in exchange for a future income stream. Annuities are monthly payments that can be set up in a number of different ways, such as to begin paying immediately or much later. Annuities are the pinnacle of passive income and may be set up in large variety of ways depending on your specific needs. The insurance provider can arrange for a monthly payout right away, or you can plan for the payment to begin when you retire. For example, you can set up an annuity that has a fixed return or one that could offer a variable payout depending on how the annuity's investments performed. An annuity can be set up to pay out for a set period, say 20 years or a lifetime. It could cease payment on your death, or it could continue paying out to your spouse. The options are wide. Annuities are little complex for common people, and when you set one up, you're often locked in for a long period, though you may be able to get out by paying a significant penalty. Always read the fine print on the contract carefully so that you understand the pros and cons of the specific contract. Every annuity contract is different, and each may offer a unique set of benefits in order to cater to your specific needs. It's necessary to understand what you're signing up for. Number 11, buy a local business. A local business offers you the potential to generate a cash flow stream through an existing and established company. If the business is profitable enough, you may be able to hire a manager to run it for you while you make only the biggest decisions or none at all. You may be able to get an attractive loan to buy it so that you put less of your own money at risk early on. Local businesses may have attractive and profitable niches that you can buy into, and ones that cannot be easily replicated by competitors. You may be able to piggyback off the seller's expertise or credentials, especially at the start as you get up to speed. Sellers may be willing to finance part of the sale, giving them some incentive to see the business succeed. Also, you may make part of the purchase price contingent on certain profit goals or other metrics. You'll need to carefully vet any potential acquisition candidates, or you end up with a business that's much less profitable than it appears or that has fading prospects. It can prove valuable to work with experienced and honest brokers to get the best deal and avoid pitfalls, or hire a consultant to help evaluate a potential deal. In addition, if you're hiring a manager to run the shop, you'll want to be sure they're honest and competent, or you'll have problems. Number 12, gold and silver. Investing in precious metals like gold and silver could provide you a hedge in the potential economic or market downturn, as well as during sustained periods of rising inflation. Prices of gold and silver always tend to increase over time, unlike other assets which are affected by market dynamics. Gold in particular has very less correlation with stocks and other major asset classes. Hence, gold is less affected by economic declines. Both silver and gold are good portfolio diversifiers. However, many investors do not consider gold and silver as income-generating assets, which means these assets do not generate any income by themselves. Still, I would recommend keeping some in your investment portfolio as extra security. Number 13, InvITs. Infrastructure Investment Trusts, InvITs, raise money from investors and invest them in infrastructure assets such as power transmission lines, roadways, mobile towers, etc. They declare quarterly DPUs. The listed InvITs in India include IndiGrid InvIT, Power Grid InvIT, IRB InvIT, etc. InvITs can provide you with passive income in the form of quarterly DPUs and also have the potential to offer capital appreciation in the long run. As the InvITs grow its revenue by investing in more infrastructure projects over a period of time, there is potential for an increase in DPU. Number 14, intellectual properties. For intellectual properties, there are 4 things inside it. 1. Copyright. 2. Patent. 3. Trademark. 4. Trade secrets. I made a song whose lyrics and music I gave myself, so I could get it copyrighted. If you are on YouTube, you must know that sometimes copyright issues happen when you use someone else's music or video. Then, sometimes copyright issues can come, and sometimes he or she can get your video removed. And sometimes part of your revenue goes to that person. That's why if you create any music video, you can copyright it. It can also generate revenue and give it to you. If you are making new technology, or suppose if you have invented a new tire, then you can patent it. All the companies that will use it, you can license it to or sell the patent to companies. Some very rare people keep earning a lot from patents because the company keeps paying them. Number 15. Content, endless content. Content is a very popular way to build passive income at home or through the selling, for the use of intellectual property that you have crafted yourself or for which you've purchased the rights. Creating content can be a lot of work, especially for work that is engaging and reaches a large enough audience to generate income. But once you've created something that people are using, it is possible to generate revenue through display advertising. Using a program such as Google AdSense or to run sponsored content, which means companies pay you dollars to publish a post on your blog. Another way to monetize a blog is affiliate marketing, which allows you to earn commissions if your readers purchase a product or service you've recommended or linked to. You may, however, find that creating content is not as hands-off as you might expect. There's always pressure to create more content or update that you have to keep it viable. Some people will find it very strange to hear this, but the truth is that having money is a very good thing. You know that even a big company like Apple keeps cash with them, and Apple currently has $200 billion in cash. They do this because often such opportunities come that we need money through cash. You can do very fast transactions and you can get many things cheaply by giving money. So, having cash has many advantages. You can use it in an emergency, so don't forget the value of in-hand cash as well. Thank you, Brain Grain family. If you like this video, then do like the video and subscribe to the channel. And if there is any topic on which you want to see a video, then do let us know by commenting. See you soon with another amazing video.